Okay, I think we are ready to kick this off. So, good day. We're coming to you live from wherever you are. It's the Tariff Tea. This is the webinar that you probably never asked for, but you absolutely need. So, we're here to spill the tea on tariffs, stir the pot a little bit, and serve the hottest insights. And remember, the last time there was a tax on tea, it kicked off a whole revolution. So, quick note while this disclaimer is on screen, everything we're covering today is for informational purposes only. It isn't legal advice, and regulations can shift quickly. In fact, I should probably have my Truth Social up because Trump could be changing something right now as we sit in this webinar. So always review your specific facts with your internal or external advisors. And with that said, let's jump in. So I'm Nunzio De Filippis. I'm the co-CEO of CargoTrans and a licensed customs broker. I'm here joined by Rennie Olson, Director of Trade Compliance, also a licensed customs broker. And together we're here to break down what's hot in terms of hot headlines in the world of tariffs, share a little bit of the CargoTrans Insiders Brew, and we're going to walk you through today's strategy spotlight, which will focus on first sale for export. Hopefully we have some time for sip and share, which is some Q&A. You can send questions throughout the webinar. They'll be saved. If we don't get to any questions or everyone's questions, we will get back to you after the webinar. So to begin, let me just do a quick check, make sure everyone's in. Okay, good. So to begin, some hot headlines that we want to focus on. The one that we've been hearing about since the Supreme Court heard the arguments last month, right? In terms of, are the EPA tariffs that Trump has been using, are they legal, right? And we've all seen the opinions that the justices seemed very skeptical, right? And most recently now, just this Friday, Costco actually took a little bit of an offensive, and interestingly, they filed suit in the CIT. They also basically joined Revlon, Bumblebee Foods, and others. So a lot of people kind of looking at this saying, what if Costco is selling it, right? I want to buy it, right? So how do I get in? And Rennie, your opinion, like, why do you think Costco made a claim in the CIT on Friday? Because lots of importers on this webinar are saying, like, I want to get in on it if there's something that might benefit me.
Yeah, and understandably so. I think Costco, without knowing, their full background and intent, it's clear that Costco was not overly confident in how the Supreme Court would rule, whether it be in the favor of agreeing with the CIT and the Federal Appeals Court that there was an overreach of presidential authority, or whether the Supreme Court would rule alternatively and say, no, the president didn't have that. So rather than sit back and wait for the maturation of this class action suit and have their options limited based on either a decision going in the direction of the trade or in the direction of the administration, I believe Costco said they wanted to write their own script. They wanted to use the justification and go straight for a suit that would name themselves as a primary and go after and again control their own destiny as opposed to any potential backlog in the process of possible deferment of post-summary corrections or protest refunds to set themselves apart independently.
So assuming, right, refunds are due, right? Customs is going to return the funds really fast, right? As fast as they collected it, they're going to just give them back, right? Is that how this works? I mean, can you give us some insights in terms of what should importers be doing now to prepare for potential refunds?
Right. Well, don't expect that it'll be quick. Okay. So the first thing that will have to happen is upon such a favorable ruling, there's going to be a directive issued by the Supreme Court as to how that mechanism should be, and or some time granted by the Supreme Court for customs to come back and say what would be feasible. Right now, we don't know. Right. If we learn from past history, where the generalized system of preference refunds was issued to the trade after years of collecting it, right? That was automatic. That was flagged at the time of entry. That was set up proactively. This is not that situation. I foresee a bottleneck. I foresee a process that's more on the longer side. But like anything, what importers should be doing proactively to prepare is to make sure that they have transaction records of the payments that they have made since April. Putting your pens, fine tuning your internal reviews of your ACE reporting, working with your brokers to make sure that you have aligned exactly with your duties paid on timelines associated with what can be filed as a post summary correction, which could be filed prior to liquidation, and then protest, which could be filed up to 6 months after liquidation.
Yep. So real quick, I've been asking importers that we've been meeting throughout the past few months, like, where do they think this is going to land? Most say feels like this is illegal, but they're kind of like, there's no way the government is giving all this moolah back, right? So just to throw it out there, there is hedging options, right? You can gamble on anything these days. And if you believe that the money isn't coming back, there are organizations that are buying your rights. They're paying, I think, 10% or maybe even less every day. I guess their rate changes, but just putting that out there if you want to take some chips off the table. Next kind of hot headline is there's been some exemptions that have been retroactive from November 13th, mostly with food items, coffee, tea, tropical fruits, meats, right? And I have a T-shirt on here, Rennie, that says, "Be careful, or you'll end up on my tariff list." Does this mean like the tide is changing? Uh, is this going to be more carve outs, or is this like just tactical housekeeping? Is there a broader pullback in EPA?
I think, using the term "this is a fluid situation," right, is an understatement, right? We know and we've seen, you mentioned, staying alert to your social media, right, for updates. I don't believe that the tariff situation is going to improve dramatically. I believe that tariffs are here for a long time. I believe that once the reciprocal is ruled on in either way, right, that we're going to see a resurgence in the 232 program, where there has already been established precedent that the president has that authority to use 232, which is not part of the Supreme Court ruling. But I think there is a reaction that the administration has when there are downturns in the economy, when prices soar in specific areas, which is why the agricultural list, came out on the 13th, right? This was a reaction to the actions of increased cost, that buyers are facing. And when the news media pays attention to that, then this list, came out, so is coffee any more important than pharmaceuticals, right? You can't put that into context. However, do I think that there is a possibility that the Annex 2 exemptions will undergo additional changes? Absolutely. I think there will be additions, and I think there will be deletions from that list, right? We're already pending what's on that list with the pharmaceutical and semiconductor industries, right? So that may be the first result of what the administration looks at, removing some of these exemptions if that Supreme Court ruling is not in their favor.
Thank you. Okay, so moving on to our insider brew, right? bad boys, what you gonna do? I'm sorry, I won't sing anymore. But
It's pretty.
you know, customs is escalating enforcement, right? It's very, very clear. We've seen it on the customs broker side, significant increases in your request for informations, your CF-28s, notice of
Correct.
action, CF-29. And start with kind of like valuation, right? There's been this shift into like DDP, and with that, there's manipulation of valuation maybe going on, right? And that's a major target. And we all know that CBP has now been using AI to detect variances, and they're getting really fast and really good at this, right? We have first sale for export, a huge shift, which we're going to talk a little bit about later. Many are shifting to this valuation strategy, but there's lack of documentation and mapping and flow charts, which customs is targeting, right? 232. Right. How did you get the steel versus non-steel derivative? They're asking those questions. Classification is always one that's being heavily targeted. The importer sometimes will say, "I've used the same HCS for years." We know that's not a defense, right? Country of origin is a big one, right? Especially when you have China components that are flowing into Southeast Asia. Was there substantial transformation? And just kind of sharing, right, some numbers. 160% increase in fraud reporting and complaints on potential tariff evasion, right? The whistleblowers are getting very loud, okay? There has been more than 400 million in unpaid duties that have been covered by EAPA cases just January through August alone. The DOJ and customs have now joined forces. This started in August, and there's a trade fraud task force. All right. So what's an importer to do, Rennie? Like you see this other side beefing up and like this significant pendulum swing. How does an importer add offense into their playbook?
Sure. Well, it starts by accepting the reality of the moment, right? Because to your point, these are facts. These are statistics that don't lie. And we have to understand that senior management needs to be put front and center with the realization that this is a new financial risk. Now, there have been many that say, well, no, this all results in what is referred to as negotiations, and they have downplayed this financial risk even before the realization of the tariffs being implemented in April, right? So we can go back and watch how customs has always used enforcement as a follow-up. They just haven't done it this soon, right? In 1993, they issued the Mod Act. They gave a 4-year grace period before the actual enforcement period began. In 2016, we had the Trade Facilitation, Trade Enforcement Act, right? That materialized to the greater extent 4 years later in 2020. But that's not the case here. In April, the EPA was issued, right? In August, we've got this task force, right? And, every action includes a reaction. And you laid it out perfectly that when the tariffs hit, a lot of importers went to mechanisms in play that were to decrease their values, was to change what they believe their origin was, assuming that they were holding the pen to the rest of the story. However, trade enforcement followed a lot sooner than a 4-year grace period, right? And national security and enforcement have been promoted as the two objectives of this administration. So enforcement shouldn't be a surprise. It is the response to these actions of classification, valuation, origin determination that has been a knee-jerk reaction, again, to try to manage the financial risk. So I'm not saying that all importers are on the bad actors list. However, customs doesn't know that. So to your question, what should importers do? They should heighten their awareness on the existing trade compliance responsibilities on being able to defend the classifications that are being used, which is not a new requirement. But as these harmonized numbers changed, as they were introduced with every amendment to the tariff structure, there is an important component that we have to defend, not only the regular harmonized numbers we're using, but the 9903 numbers that we were using. We have to be able to defend the value that we are declaring, not because valuation is new, but because there were companies who had established profit margins where they weren't looking at first sale options. They weren't looking at unbundling. They were, embedded in their forecasting because their landed costs still had a profit. Then came the tariffs, and then there was this quick reaction. Well, these enforcement efforts are looking at those reactions, and they are looking at them very carefully. And if you can't defend the practices, follow the leader is not a good practice in trade compliance, because customs will ask questions one at a time. And an unacceptable answer is, well, I understand that a lot of people are doing the same thing. That will not, again, be a positive answer. Actually, it will lead you down a greater path, because that would be basically fraud, knowing and intentionally doing something without a compliance defense. So again, origin to me, brings up the rear. How we are determining origin because of the various country rates. We can't assume. Customs has introduced language on an enforcement platform called illegal transshipment, right? All based on the transparency of origin. So companies need to defend how their origins are not only transparent, but how they've been determined and listed, and not just that was the origin on the commercial invoice, or that's what we've always declared as origin.
So, I know there's some importers that are, let's say, finding maybe some skeletons in the closet, right? They're kind of like, there's things that they felt kind of good about, but now they see this enforcement coming down, and there might be some concerns like bubbling up, right? What are we seeing? Can we share a little bit about like prior disclosure? Is that something more importers should start considering, before customs opens up that closet door?
Yeah, I mean, every import entry has a statement on the bottom of your entry summary 7501. And that statement says that I, as the importer, will immediately furnish to customs any information showing a different statement of facts. That is on every entry summary. So again, to your point, we're often asked, should I tell on myself, or should I just wait? Well, you've already committed with every entry that you filed that if you discover upon that point of discovery, that you will bring that to customs attention. So a prior disclosure, again, is an opportunity to tell customs something that they don't know about. The benefit of a prior disclosure is that you will have mitigating factors, mitigating circumstances to reduce a possible enforcement action, as opposed to waiting. So the waiting game, again, especially in this environment where customs has publicly socialized that they are not only beefing up what is already a trade compliance platform, but they are using specialized targeting skills that, like you mentioned, AI as one of them, but there are multiple task force, right? You mentioned one that are targeting different areas, and those task force are learning on the fly, but becoming very much aware of the commonalities of the default. So yes, if you discover an area of non-compliance, your responsibility is to fix it. There are variations in just how I would make sure that you understand the full story, right? Don't just say, hey, I've got my value wrong, when your origin and classification were also wrong and not included in your disclosure.
Makes sense. And so, we've been hearing tariffs equal revenue, right? And that revenue stream is now coming, under the scope. Maybe the Supreme Court takes some of that revenue away right now. So I guess I'm sitting here thinking, how else is the government making up for the gap? And it's probably, enforcement, right? Yeah.
Yeah.
So,
Yep.
So as we're sitting here, December, everyone here is setting goals and initiatives for 2026. Obviously, our strong recommendation is add compliance strategy initiatives to your 2026 plans, because you're going to need it for enforcement protection. So we will now go a little bit into the strategy spotlight. We want to take a little bit of a deeper dive into first sale for export. By far, I believe probably one of the most impactful tariff mitigation strategies that we've seen really hit the mainstream, starting in April. It's, even though it's existed for forever, right? High level, in case everyone on this webinar doesn't know what's needed. In order to qualify for first sale, you have to have more than one sale, right? You have to have at least 3 parties, okay? And it has to be a bona fide sale, meaning it has to be real transfer of ownership. Can't be just a made up kind of transactions. The purchase orders have to be clearly destined for a U.S. sale. And if there's related parties happening, it has to be an arm's length transaction. So, typically you have your factory, you have your middleman, vendor, trading company, sourcing agent, whatever you want to call that, middle person controlling maybe the factories, and then you have your U.S. buyer and importer. So you want to really have a smooth flow between the 3 parties, and we're trying to get to the value of the first sale from the factory to the middle person to declare that as your entered value, and obviously pay tariffs on that rather than the higher second sale. So, Rennie, if an importer of record is not set up for first sale for export today, can they build a program, right? They often ask us, like, how do they get there? What do they need to do? And they obviously want something that's defensible.
Yeah. So the answer to your question is absolutely yes. First sale is not just a platform for existing relationships. There are, changes to sourcing platforms that are happening every day, specifically, targeted by the tariffs. And, in order to qualify for first sale, you have to have a defensible triangle transaction as you've laid out, right? But it doesn't mean that it had to have existed for the past 5 to 10 years. You can develop it. The threshold, in our opinion, is you need to make sure that as you develop it, that you quantify it through a feasibility review, that you're able to demonstrate that you can, qualify both first, second sale, proof of payments between both parties, right, in that triangle relationship. And if you can, develop something and you could put forth a structure, even as your purchases just begin or just go through a maturation of amendment, as long as you can defend that prior to the first import in which you are declaring that lower first sale, again, it is something that is very much a defensible, compliant project. This is not something that you are throwing, a dart at the dartboard hoping it sticks. First sale is here to promote the use of imports into the United States using that first sale value in existing and or developed situations where the intermediary gets a lower price and sells to you here in the United States, triggered with the instigating factor of a purchase order sent from the United States that starts the process rolling.
Yeah. There's, as you said earlier, in terms of enforcement, right, and audits and request for informations, obviously first sale is on radar, right?
Yep.
Customs radar, right? So, what are some steps that we can help with in order to ensure that an audit is passable, right, for something like, in order for it to be defensible? What are some things, high level, that we can help importers with?
Well, talking about for sale, you need to have a feasibility review. You need to have a second set of eyes that says, yes, this does meet the criteria. That facility review will end up in what's called a position statement. That position statement is a demonstration of reasonable care, which is one of the three efforts that Customs has put forth to the trade to defend any action, right? But trade compliance and a defense of your actions don't begin and end with first sale. So for any value that you're declaring, for any harmonized number that you are declaring, any origin, any type of entry that you may be using again to either find an exemption to the tariffs or deferral by the use of a bonded warehouse or a foreign trade zone, any amendment to your process needs to be defended. So the escalation of internal trade compliance, written SOPs is a good platform to start, but informed compliance, making sure that your team from procurement down to logistics to finance to trade compliance, dealing with your brokers, all have transparency and understanding of what the end goal is, which is a compliance defense rather than just, again, a following of the ball and watching that ball bounce because someone else told you that, yeah, you can declare a factory price. You don't have to declare that. Let the factory be the importer and you don't worry about any of the import process. You have nothing to do with it. Those again will end up on the bad guy list. Those will be the first targets of that trade fraud task force, right? Because that's not defensible, right? The moment you place a purchase order, you are the U.S. order party. You are a party to the transaction. Those goods wouldn't be here for you. So you can't take a back seat and say you knew nothing about it, nor never ask what values were being declared by a foreign importer of record to customs for goods coming to you.
Awesome. Okay, we're almost at time. And as you can all see, tariffs are shifting quickly. Customs enforcement is rising, and importers who plan ahead will have more control over 2026 than those who react late. So our goal with the Tariff Tea is simple: to make sure importers don't get burned by the hot Tariff Tea. And since tea was included in the recent EPA exemptions, it looks like the administration heard about our Tariff Tea webinar and decided to avoid a revolution. But we'll open this up to some Q&A. If anyone has questions, you can drop it in the Q&A. We only have 2 minutes, and of course, anything that is not answered today, we can get back to you. One question I see, Rennie, is talking about defense and compliance or being prepared for enforcement. What are some specific examples that an importer can do right next year in order to kind of beef up their defense, or actually, like I like to say, play offense?
Well, you start with building a trade compliance platform, right? And I don't want to say that it is the end-all defense, but one of the first questions that Customs asked, again, going back to the reasonable care standards of 1993, was, do you have a written compliance manual? Do you have a written set of procedures that govern all of these actions we've been talking about? So let's just say that hasn't been updated or hasn't been created or hasn't matured as the company has grown or been updated to amend for the current process that we're now dealing with these variations. I would say, again, upgrade your trade compliance demonstration, informed compliance, internal training. Those written SOPs need to be more than just a manual or an electronic guide that is sitting there in a file or in a library internally. It's got to be, again, use-driven, and it has to be the platform in which decisions are made for instructions to brokers and/or responses to customs.
Great, thank you. So we will wrap this up because we're at time, and so we're going to have these regularly monthly Tariff Tea webinars, so look out for the invite for the next one. What we will be watching for is obviously the Supreme Court ruling that could come before the end of the month. We're looking at also India-US talks, because we're hearing that there's close to renegotiating the 50% tariffs that they're on, and obviously watching out for pivots, right, for the administration possibly using Section 122, 232, 301 as the EPA tariffs are getting challenged. So thank you all for joining, and we will see you all soon.
Take care.